Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the start of this week has been rather erratic and very whipsawed, as the Australian dollar posted significant losses late last week as it gyrates lower and now posting a weekly loss of 1.5%, with it inking a fresh 11-year low this morning of 68.80. That was on the open this morning, as it now slowly attempts to recoup some of its losses, and we can see it's trading around just above 66-cent handle. On Friday, the bears inked in an intraday low of 65.85, and after crushing the level of 66.60, now seals the fate to the broader picture of 64 cents. Any advances should see opportunity towards 66.45 as minor, and where this downtrend comes in, fresh bearish supply, that is, or a supply zone, should come from around 66.75 to 85. A little bit of a mixed reaction coming through on Friday. First of all, the market bounced in front of the level of 107.55, seen as support, and got to a fresh intraday high of 108.60, I believe. Just double check on that. Yes, that was the wick there of the candle. Since this morning, the pullback has been slight, but nevertheless, keep an eye on these technicals because it could see further risk to the upside, because the US dollar index, which measures the greenback strength against a basket of 6 major currencies, did have a bit of a turnaround from the peak of the 99.77 high, and therefore plummeted about 40 points, which did help this rally. There was some divergence though from the bullish advance, and also with the fact is we've broken the trend and the ADX is not trending either, and we are above the RSI, which does merit a little bit more to the upside. So I still feel that we are looking towards 108.70.80 for the start of the week, and with support seen at 108.05. Dollar yen, well, it didn't stay too long above the 112.45 handle, and as you can see, the market has dropped slightly and looking towards its support level of 111.35. If so, then I do anticipate a break there and would give further guidance towards 110.90 to 110.15. Fresh rises should see resistance around 111.95 and a cap now at 112.45. It was on Friday that traders ploughed into safe haven assets as concerns over the global economic fallout from the fast-spreading coronavirus as it spirals further into uncertainty. So far, it's been reported that the death toll has reached around 2,442 on Sunday, after 97 more people died in the Hubei province, the hard-hit epicenter of the outbreak. In its daily update, the Province Health Commission also reported 648 new cases of people infected with the virus. This brings the total cases in the mainland China past 76,936. However, on Saturday, 2,230 people were reported of recovering, which is a good sign. And given the fact from that, though, elsewhere, South Korea reported 52 new cases. So it is showing that the spread is actually showing a little bit speeding up, that is. So the market's got very much concerned, hence why safe haven demands come back to dollar yen and yen strength, and also the fact that gold rallying as well. Sterling still mixed as it whipsaws inside this range, but I do anticipate any advances towards the region of 129.80 to 130.25 as a potential opportunity to shorten the market, as I feel there are bears lurking around this region, and no doubt we'd expect to see a turnaround and look back towards the lows that we saw last week of 128.45. Canada, well, with the oil slipping slightly, has recovered some of its losses from Friday after posting a fresh intraday low, that is, of 15 days at 132. The figure before staging on this morning's uptake. You can see from the technicals though, it does want to push a little bit higher, but I still feel above 132.65 to fail, with the cap still remaining around 133.1545. If we do see a failure, which I anticipate, then I'm looking back towards 131.85 as the first immediate target. But after taking out level after level, starting from 1,615 and then on to 1,645, and now exceeding its target of 1,665, we've got a fresh 7-year high this morning of 1,680 before dropping back. Looking at this pattern closely, better keep an eye because it could be a gravestone or a shooting star, depending where it closes tomorrow in New York. Nevertheless, I feel the market has possibly now reached its upside target, or extending that is, from 65, and I do anticipate a pullback. We are overbought, the trend is overheating, so let's see if we do get some kind of pullback to at least 55 or around the break level, around, that is, of 1,645. Wrapping up with oil, well, the market, since it's reached its objective, $54 a barrel and a half, that is, it has pulled back and now looking back to the 51 figure 40. I do anticipate buying from that level or somewhat demand, as we saw recently from this dragonfly doji, and if so, then we could see a rebound back towards the top side of the range of 54.5. Do note and keep your stop losses according to your risk management, because a break of 51 would really open the downside to $49 a barrel. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new day and the new week.